Good afternoon, everyone. Thank you very much for coming. Today we have David Leitch from UBS. David is one of the senior analysts in UBS. He has more than 30 years experience as an analyst. He won many awards in different categories, so it's great to have him here. It's great to hear what he will say. So please welcome David.
Thanks everyone. I appreciate the opportunity to be here. I hope I can say something that's in a small way useful, although actually I don't know how much I'll be able to say that people here don't already have some idea about. And what I'm going to just attempt to do is describe a little bit about the electricity market in general and with a focus on the market, and I guess the issues that from a very big global long-term perspective, I think PV will have to overcome if it's to continue to make the kind of progress that most people in this room would very much hope it does make. First problem, of course, to work out how to work this presentation, but we'll see how we go. Whoops. There we go. And so I've divided the presentation into two parts, the problems and the solutions. The solutions have got about 2 slides, the problems have got a lot more. But really the problems boil down to 2, one of which I think a lot of people in this room will be familiar with from a technical perspective, and one of which perhaps slightly less so. The first problem is that the whole reason why PV has got a big push on from governments, particularly in Europe, is somehow related to a desire to have less carbon. It is ultimately, that's what's driven it along. So it was a regulatory and a decision made by governments. But they didn't just make a decision, of course, to pick solar as the one and only way of solving that problem. They've picked a whole range of answers, and one of them has been an emphasis on energy conservation. And it's partly becomes market driven as well, because the market itself sees that, or participants in the market see that electricity conservation and carbon reduction is likely to be something that will be rewarded, or not doing it will be penalised, and therefore you make efforts to conserve electricity. What this means therefore is that the market's going to be oversupplied, and that from a market perspective therefore PV has to force other generation out of the market. And that's all, generally speaking, a much tougher task from a financing perspective than trying to get into a growing market where you're just providing an incremental unit of supply. The second problem is something I only sort of realised, not understanding anything at all about PV, when I started writing this presentation. And that is that basically, of course, PV capacity utilisation is something that's somewhere between 15 and 20% at the moment. That is, you put a megawatt in, you get 8,500 hours times 15% capacity utilisation during the year. And what that essentially means, if you put enough power in to provide even 20% of the total electricity demand, for a couple of hours each day, you'll have enough capacity to supply 100% of demand. And from the market's perspective, that's a real problem, because you've got all this capacity providing all the output, and then all of a sudden it turns off and you've got to fill the gap. And so it's kind of limiting. And also one of the consequences of that is that at the time when the PV is supplying 100% of the output, it's probably the price is going to be 0 or pretty close to it. If it's supplying 101%, or the marginal revenue will be fairly low. And obviously it's not going to earn any revenue when it's not operating either. So that becomes a kind of a problem in itself as well. The 2 sort of problems, I'm just going to illustrate how even at relatively low rates of PV penetration that we've seen so far globally, coupled with the other things that we've talked about, the other moves like to reduce consumption, and also the other forms of new generation that have been forced into the market, are already causing big problems. So this is just a little look at the global electricity consumption growth. The figure 1 shows, divided into a few selected regions and countries, what's actually been happening since 2000. And you can see that basically if you abstracted China out, the growth in the global market has been very slow. You can interpret this as in a couple of ways, but one interpretation would be that the rest of the world has just shifted all its energy intensive consumption into China and let them deal with the problems. But there are other interpretations as possible. But the consequence, I think, is shown a little bit in the slide below, which are UBS forecasts, where we're showing declining consumption in Europe. We're showing some growth at 1% in the USA. However, I'm a little sceptical as to whether that will actually occur. And we're showing declining consumption growth in China. And again, I think it's quite possible, given the type of industrial change that's going on in China at the moment, that even that may prove to be a bit optimistic, particularly if the more sort of pessimistic carbon implications do turn out to be realised in a relatively short, and I'm talking 10-year type of time frame. But we don't know. One of the things you quickly learn as an analyst in financial markets is that you really have got no idea at all about what's going to happen in the future. People make extremely confident predictions and then say the exact opposite 2 years later. And it's no problem. At the same time, we are seeing this investment in clean energy is obviously increasing. It kind of hit a peak in about 2011 at around 300 billion a year US. At 2014 it got back to that peak, and we expect it probably get to a new peak over the next couple of years, but driven very largely by the degree of regulatory pressure that comes to bear on it. Energy efficiency, this is just probably has contributed, I didn't get a chance to do all the numbers exactly, but I suspect it's probably contributed more as a source of negative new generation, if you want to think about it that way, or as a source of competition in the generation market, probably more than wind and PV combined in total, according to the IEA. You can see that it's roughly equal to the total consumption of, say, Europe, the amount of energy efficiency that's been achieved since over the past decade or so. And that's been supported by government policies. This is a list from the previous government in Australia, federal government, and I guess it would have changed a little bit in the past couple of years, and we'd probably have more state-based and North American kind of policies now. And there are renewed moves, obviously, to change the carbon pricing, carbon emissions in Europe. But Europe's kind of yesterday's story, as we'll get to. It's the new and emerging markets that are probably going to drive the global outcomes for the next few years. Of course, even 3 years ago when we did the survey of all the electricity companies that we cover, and UBS has offices in Europe, North America, South America, Asia, as well as in Australasia. So we actually have a team of about, I guess, 10, 12 analysts who look at this amongst other things. And we're mainly interested in forecasting company profits and cash flows and which shares are going to go up and down. So you have to understand the industry structures and the threats and weaknesses, strengths, opportunities. So we did a survey a couple of years ago, and everyone's very worried, obviously, about what this technology change and particularly what renewables are. Renewables are seen as a threat, and for very good reasons. They are a complete threat. They're probably a threat to themselves as much as to anyone else. That's the point we'll get to. Generation profits have been pretty weak. As I've tried to allude to, there's new generations being forced into an oversupplied market where consumption is declining. And in Europe and the generation sector's underperformed the market by 75%. In the USA, it's underperformed by 32%. Its generation's actually outperformed in China over the past 3 years. It's outperformed the market that itself has gone up like a rocket. And that's because there is still some consumption growth overall in China, in part. And it's also because the coal prices have come down. And so the spark spread has opened up. What are we currently saying in Europe? Our European team is kind of the stars of the UBS Utilities global team. And that's very lucky for us because obviously what's been happening in Europe, and particularly in Germany, has been at the forefront of the changes that we're seeing in the global market. So what we're currently saying is that by 2017, across the whole of Central Europe, which is not just Germany, but obviously includes Spain and Italy and France, about half of the thermal fleet will be free cash flow negative by 2017. Half. And what's free cash flow? That's the cash flow after paying the costs of the business and the kind of maintenance capex that's necessary to actually keep the plant running. It's what's left over to pay dividends or to reinvest for growth. And essentially, if you're free cash flow negative and continue to be so in the fullness of time, you won't be able to finance the business and you go broke. And so how do we think that's going? And you can see in figure 11 there that cumulatively there's already been about 70 gigawatts so that of thermal generation closed, which we can put in comparison, compares with something like 50 gigawatts of new PV that we'll see globally this year. And we've got to the point where you can't, according to our European team, or at least the authors of this report, you won't be able to actually afford the level of closures from a system reliability point of view, and we'll get quite argumentative about this, or to happen as fast as what's going to happen. And so we've actually got to the point where they're thinking that the thermal generation sector will have to be subsidised in Europe. Which is reasonably humorous when you consider that the renewable sector is subsidised and that's how it gets into the market. Now we're going to subsidise the thermal sector as well in order to stop it exiting the market. So everything's going to get a subsidy. Probably not the... and we're also seeing, of course, all this new capacity in wind. But as I'll get to later on, we're also starting to see a slowdown in the growth rate of new renewables into Europe as well, which relates to the second problem I alluded to earlier on. In Germany's kind of the crux of the market. It's got to, renewables in total have got to about 25% if we exclude hydro, which it's renewable, but it's not really anything, it's like a constant that sort of sits there. So new renewables, which is basically wind and solar, have got to about 25% of electricity supply. And prices have gone up 54%. That's what it's taken to get there, which has mainly been about half of that price rise has been driven by the EEG surcharge, which is essentially the cost that consumers are seeing as a result of the higher renewables penetration. I personally think that's a very acceptable kind of cost, but that's nevertheless what it is. And we actually, according to some of the forecasts I look at, that charge has arguably peaked for the next little while, and that's because from a financial perspective, the key characteristic of renewables, which I'll come on to, is that they have high fixed costs but low variable costs, which means that you essentially bear all the price impacts and costs of it up front and get the benefits later on. Just an example of what's been happening in Australia to thermal generation profits, which are actually very similar to those in Europe. I won't spend too much time on Australia, it's a very minor part of the global market. But essentially we've seen something over a 10% decline in electricity consumption over the past 3 or 4 years, driven by both individual households consuming less and also a decline in industrial production, mainly driven by the closure of a couple of marginal aluminium smelters. And as a result, we've also seen increases in new renewable supply. And the result of that is this MacGen, Macquarie Generation, now owned by AGL. Thermal profits, and we're looking at earnings before interest and tax, have declined from a peak up there of about 400 million down to under 50 million in 2014. And why did households consume less electricity? The single biggest reason, well, energy efficiency is an ongoing every year driver, but mainly we started charging households a lot more. Electricity prices went up very dramatically, and consumers responded to that by becoming more energy efficient. Didn't actually solve any problems, but that's what they did. Solar costs are coming on to something that you guys are probably more familiar with, and I've just lifted this out from a Trina presentation from a couple of years ago, or 12 months ago, but referring back to data here between 2008 and 2012. The red line represents the change in the module price, the module price expressed as in 2012 expressed as a percentage of the 2008 price. And the blue bars just look at the sort of components of that as outlined by Trina. I really, don't ask me to even explain what all these different initials are necessarily. I just point out that silver, which is the second worst component of costs and something I was worried about, the actual silver price has declined fairly sharply in the past 12 or 18 months. So if you looked at that today, it would be a lot lower down, further to the right on that graph. So cost reductions have come about in just about every part of the solar chain, but as we'll get to, reducing the price of solar isn't necessarily going to fix all the problems in and of itself. This is a fairly busy chart, but makes a few points. First one at the top is just trying to show how wind costs have also been reducing, which I think most people here would be familiar with, longer turbine lengths. But when we look at the levelised cost of electricity, or what I think of as the long run marginal cost, actually when we get to there, the changes in the technology are part of it. But in the last 3 or 4 years, by far the biggest driver in my mind of what's happening to all of these technologies is the fall in interest rates, global interest rates. And there's a single reason why from a global perspective it makes sense to push on with renewables at the moment. From a cost perspective, it's because interest rates are very low and financing capital intensive investment has never been cheaper. And it makes a big difference to the price. So the bottom half of this chart just gives you some, if we look at the 3 different regions that I focus on, Europe, the USA and China, we can see that in 2015, we've already driven the European thermal sector into bankruptcy, as I've tried to point out, and yet solar's making up 3% of the delivered electricity in the year, and wind's making up 8% across whole of Europe. So it just shows that these things happen very much at the margin from a financial perspective. When you get declining demand and that much growth in only marginal amount, really from a long-term perspective, you're not going to fix global warming perspective problems with those low levels of renewable generation. So far, what we've done is to create a problem where no one's making any money. We haven't fixed the problem, and we haven't fixed the global warming issue. Even by 2020, even given the growth rates that we're talking for solar and wind, it's still really only going to be making, from the longer term system perspective, in my opinion, relatively minor contribution to that particular problem. Here I've just had a quick look at the levelised cost of PV electricity. You hunt around the place, you find a lot of different numbers on this. Most of the numbers tend to be backward looking, and they all require a whole bunch of assumptions. I guess the only thing I've done in this chart that would be different to what you would see in most other stuff you could find out or that you could work out for yourself is that we've used a very low cost of capital, 5.5%. If I'd been doing this 3 or 4 years ago, I'd have been using 10%. And that makes for a project where all of the investment is up front and the present value. I take it everyone here understands about present values. Yeah? Good. The project, what it essentially means is the cash flows in the out years, you continue to get the revenue benefits, and at these low discount rates, those revenue benefits in the out years are pretty important, whereas at higher discount rates, they're not. And so what we're seeing at the moment is that the cost per kilowatt hour in the USA, again, I guess basically is still above, it's not really at grid parity in the USA, for instance, and certainly I don't think would be even in China at the moment. And grid parity actually, whilst it's a desirable thing to have and kind of a trigger point for consumption, actually doesn't solve the problems, the system's problems either longer term. Here we've just looked at the sensitivity of the present value to the two things: how fast the industry grows and what the learning rate is. I think the learning rate obviously is, from what I've been told, is you double volumes, you get learning rate to say a 20% reduction in unit costs. There doesn't seem to be any great theory behind this. It's more of an empirical observation, and it stands to reason that the bigger and bigger and the more mature the industry becomes, obviously the learning rate itself will decline as it gets harder and harder to eke out the marginal improvements. Anyway, what it gets to is you see that at a learning rate of 20%, which I think has been a reasonable observation, and a compound growth rate of 10%, in 2035 you'd get the delivered price down to about $46, all else being equal. And I'll come on to this, which is still a relatively high price, but it's below thermal generation. So if we needed more generation and we kept growing at that rate, then that'd be good, but we don't need any more generation. So if you look, it's going to be a marginal cost battle and a regulatory battle. This is just having a very quick look at the global solar industry. It probably doesn't cover every company that there is in the industry by any means, just those that UBS either covers or that we keep an eye on. I guess my observation is none of these companies are very big from a global utility scale perspective. To give an example, this APA, which just owns some gas pipelines here in Australia, would have a market cap pretty much equal to the largest company in that list. Not only that, as I'll come on to in a moment, very few, the further upstream you go, the less profitable the industry becomes. If there is any money being made in the PV industry at the moment, it's in the downstream part of the industry by people who install PV and own it and try and create an IRR spread. And then they're basically arbitraging the fact of net metering in the United States. Nothing wrong with that. It's a good thing to do, but it's got a limited future. In particular, as we come on and see, I guess I might point to these PE ratios, price earnings ratios, they're generally pretty low, even for those companies that are making a profit. So the market doesn't have a massive amount of confidence in the solar sector, is what you would say, the finance industry. This is the share price performance of the whole sector, indexed to 2010. And again, it's sort of struggling, is what I would say. And the upswing, you can see that share prices are pretty much halved when there was an absolute glut emerged. So you would think you produce a lot more, everyone would love it. In fact, you produced a lot more, capacity grew even faster, the market hated it. This is the module manufacturers, and here the EBITDA minus capex is kind of a proxy for this free cash flow concept I was referring to earlier. So you generate cash from EBITDA earnings before interest, tax and depreciation. You spend some capex and then what's left over. And the answer is in 2012, the four largest module players were running at negative $1 billion combined. And by 2014, the last point we've got some data, they managed to scrape that up to zero. And indeed, those guys combined as you can see over here on the right-hand side of the chart, looked at from an EBITDA perspective, there is a gradual improvement. And that's resulting, of course, from the fact that there's been less investment in new capacity. Module prices have probably, costs have continued to come down and module prices have stopped changing all that much. But I haven't really focused on exactly what's going on at that particular part of the business because I've tried to look at it. One, I'm not the solar analyst of these, the analyst of these companies, and two, I just wanted to focus more on the longer term kind of issues from a global electricity industry perspective. So they're kind of the problems, just to reiterate. We've got a technical problem that if you put a whole bunch, enough capacity in to serve 100% of the market at lunchtime, you're still only serving 16% of the total market. That's a technical issue that has to be overcome. And we've got the second problem, just to reiterate, that all of this new supply has to be forced into a market which is declining and doesn't really needs less supply of everything. So in terms of the market issues, I can't easily see how they'll be solved at the moment. It requires, from a PV's perspective, it requires PV costs to essentially to get down so that people could, if you were going to solve it entirely from a market issue, you'd require PV to have a lower all-up cost than the marginal cost of supplying electricity from an existing generation unit. To put it this way, the marginal cost, that is the short-term cost of running a coal-fired generator in Europe, might be, say, for the sake of argument, 25 euros a megawatt hour. You would require your all-up cost from solar to be less than that if you were going to justify a purely market-based solution, that is replacing that coal-fired generator. So I don't actually see much prospect of that happening in the foreseeable future in most of the existing markets. So this essentially means that the only way in the developed markets that solar is going to keep growing is if it continues to be forced into the market via regulation. And that regulation can come of two forms. One is obviously renewable subsidies, and the other one is taxing fossil fuels more extensively, or pricing carbon harder. And I think, because global warming probably is a great big issue, and assuming we get further down the track and understanding what its costs are, and I think, economically we talk about the social cost of carbon, but that's a concept on which the theory is complete crap, in all honesty. People have got a concept of it, but no one can really measure accurately what the cost of the Antarctic melting a bit more is. I mean, no one really has any, in my opinion, understands the economic costs of that with any precision, or has a well-developed theory about it. Therefore, you've kind of just got to make an assumption that it's bad, and that governments will continue to have policies that encourage something to be done about it. As far as the PV, what can PV industry do, or for that matter the windustry, to keep driving down costs? Because even though lower costs are unlikely to solve all the problems by themselves, nevertheless, clearly that is something the industry can work on. And as we pointed out, the basic thing to drive down costs, leaving aside what happens to interest rates, what the industry can control is the overall growth in production to an extent. And that probably requires going after markets that don't have much penetration yet. So it requires, I guess, go markets with high distribution costs, so where you can get to grid parity, high electricity prices, help you with your grid parity argument, and people can actually afford the investment. So those kind of markets, you can start getting solar in, and whilst that's not going to solve everyone's problems, it is going to help the global growth coming through in solar PV production, module production, which in turn drives down costs for all the players, and is kind of the virtuous cycle that we're all looking for. And so that's what we're actually seeing in the markets, as Germany has sort of keeps growing solar, but at a much slower rate than it was. The focus moved to Japan and then to the United States, and now I think it's moving back into China itself. But if we're looking at the sort of developing history, it's that once it gets to about 5% of sort of consumption, it tends to run into these sort of problems that we're talking about, where it's hurting everyone's prices, and it gets harder and harder to start forcing the PV in after that. We're not at that point yet, but we're moving in that direction. This is our European and US and Asian guys are always holding conferences, and we invite consultants to come in and give their views. Consultants really don't know necessarily anything more than anyone else, in my experience, but we all want to be a consultant one day, I suppose. This was Photon Consulting, which has about 25 people apparently in the USA. This was some sort of summary of what they said to a UBS conference we sponsored for investors in the United States. They are looking for global PV to peak in the next 5 years. The end game involves sustainable market position in high market value segments. Well, that's kind of a motherhood statement in a way. The sector is driven by finance, not technology, which I think is true at the retail end. So it's driven by grid parity. As I said, grid parity is not an end in itself, doesn't really solve problems, but it does provide a consumer spur to put in PV in. And they're talking about a plausible range of annual installations of 50 to 100 gigawatts per year. So 50 gigawatts per year is where the industry will probably be a little more than that this year, globally. And so if Photon happened to be right and we stayed at 50, then it would say that cost reduction, as driven by moving down the doing curve, has probably pretty much reached as far as it's going to go already. When I went back and reviewed what the people who were saying about the German side of things back in 2011, as to how they would, the energy Vede or whatever they call it, how they were going to get the PV into the market. They wanted to use the grid, so the solar's working at one time and not at another time. You can use the grid to kind of level it out. I think that's got a lot of potential in the short term and at the beginning, but as I say, once every market gets to say 20% electricity, then every individual market's going to have problems, and it's going to be harder to use the grid to shift it all around. Maybe, but it will still, the grid will be a huge benefit. The more I've looked into this, the more I've seen that the grid is absolutely part of the solution and not part of the problem. And that abandoning the grid is only going to be a very minor thing for some people. Then we've also got complementary power, wind, hydro, some traditional base load, open cycle gas peakers, but they're very expensive to run open cycle gas peakers if you're going to run them for any extended period of time. User-owned emergency power like hospitals and the like have. All of these things can help, but they're not going to take PV penetration globally from 20% or 10% of global consumption to 40%. None of those things are going to do that. As far as I can see at the moment, the only way for solar to rule the world and become the only source of power, if you wanted to absolutely imagine that, is through the use of storage of one sort or another. And if anyone in this room's got different views, I'm very interested to hear them. One of the reasons I come along with these presentations is, which I don't do very often, is to, because I don't get asked that often, is to find out from you guys what some of the answers are to these problems that seem difficult to me. Here I just had a quick look at the electric vehicle and tried to get an idea of the scale potential of that. Because electric vehicles are starting to grow very quickly from a tiny, tiny base. So from the BP annual summary of world energy, we saw that there's about 10 billion barrels of light distillates, which I assume is mostly going into petrol. And you convert that to vehicle kilometres, it comes to about 19 trillion kilometres, I guess. And if you convert that to electricity using the kind of things that we've worked on for the Tesla research that we've done, you get to 360,000 terawatt hours. What's that, petawatt hours? And you'd get to something like 64,000 gigawatts of solar that would be required to charge all those batteries every day. And so finally, I think this is pretty much my last slide. If you said that despite all of these problems, you wanted to get to solar to represent 25% of global electricity consumption by 2035, basically that would require the industry to grow at a growth rate of 14% for 20 years. And the compounding effect of that is enormous. So we're producing about globally a bit over 50 gigawatts this year. That 14% compounded to get you up to 500 gigawatts a year, I think by 2000, so 10 times the current scale. It would drive, on the numbers we're looking at, the cost of electricity down to about $36 US, again assuming that 20% learning factor could be maintained. It would require about $5 trillion of investment cumulatively, allowing for the cost reductions each year. And as I said, it just won't happen without some form of storage, because you'd need globally interconnected networks and moving everything around. I just don't think it can get there without storage coming in or some other technical solution that I'm not aware of at the moment. But what it was interesting to see was that at 25%, it's about 5,000, let's call it 5,500 gigawatts. If 25% of the vehicle kilometres that are currently being travelled were electrically powered, that would require an additional 64,000 gigawatts. So I think the scale of the opportunity in the markets for electric vehicles absolutely dwarfs the prospects. This was the conclusion I came to out of it. The scale of that opportunity dwarfs the actual opportunity in conventional electricity markets for solar PV. And then we haven't touched on household storage or whatever, and that would obviously a very hot topic around at the moment as well. But so I guess that's about it. I actually talked for longer than I thought I was going to. And if I was in a group of investors meeting, the guys would never have been silent for even 5% of this amount of time. So you guys are great listeners. But I'm very happy to take any questions if there are any.
Thank you for a very provocative talk. You mentioned that you're seeking answers to problems. I was more interested in what you define as problems. And some of what you had listed as problems, I don't see as problems. Improved efficiency in the market for using electricity, I don't see as a problem.
Neither do I.
But you have it listed as a problem.
No, it's listed as a problem for higher solar penetration.
It's a problem for the dinosaur companies that have for 30 years ignored any discussion of what's coming and have just...
Let's forget the adjectives dinosaurs and whatever, right? Let's talk without any adjectives at all.
Okay. The companies who depend on the existing system that's been running for decades, that have resisted change and have resisted warnings and have continued to try to maintain the status quo. If you take their point of view, yes, solar has lots of problems. If you take the point of view of improving or reducing the risk of climate change, then some of what they see as problems aren't problems, they're solutions.
So let's take that. From the point of view of climate change, reducing electricity consumption is good, right? I mean, it helps to solve the problem. That's the definition of good. From the point of view of making money, it's bad. It's bad. Doesn't matter what source of generation you are. An existing source of generation, fossil fueled most likely, or could even be hydro, or a new source of generation, wind or solar. A smaller market means a smaller market opportunity, which is bad from the point of view of profitability, and that's what I mean.
With that definition, yes.
Yeah, I just wanted to just ask you a bit about how, looking at your analysis, I can understand there's definitely a portfolio of power production that we have out there, different technologies. Different viabilities, different economics of production and so on. One of the things which I think we can see that's happened since the introduction of a lot of renewables into the grid, particularly solar during the day, is that we've seen the shape of consumption, or the shape of covering the consumption has changed dramatically. So we've seen a peak which was happening, the highest peak of energy consumption was around 2 p.m. I think I'm talking about Europe now in general, but it's pretty common around the world in developed markets. And that's completely changed. Today we see the peak pricing happening in the morning and in the evening around 8 p.m. We see the highest market prices. So basically what it seems to say is that we've turned the market on its head, because we've had higher power consumption during the day in the past, which is being better covered by renewable energy production, and during the evening when we've traditionally had relatively low power consumption, we continue to have a lower power price, but that shift has changed completely the way profitability of certain generators has worked. So I'm just wondering if, when you look at it from the perspective of the market analysis, the market's a great thing. It's actually giving us all the motivation to develop new technologies to solve the problems that you've raised. So storage will get an impetus by having when the price is low, it makes sense to store. When the price is high, it makes sense to push energy back into the grid. But it just seems to me that we've turned the market on its head, and the opportunities that are emerging from that will actually drive the next shift into new technologies that will help to solve those issues. So I'm wondering if you have a perspective on that, or
Yes, I just said don't use adjectives, but if you want to tell me that markets are good, yes, I agree. Markets send price signals, and price signals are, in the end, I think, incredibly efficient ways to allocate resources if they're done properly, and I won't go into properly anymore. I agree that I think the absolute peak in electricity consumption always used to be, and hasn't really changed, from around 6 p.m, say, or something like that. The secondary peak in many markets, and certainly in Australia, used to be around midday, and that's because the obvious reason, as well as a certain level of household demand, you have commercial and industrial demand going at the same time. And in fact, one of the reasons why solar PV has been so effective at destroying the profits of existing thermal generation is because it's been able to much more damaging to price than it has been to volume. So its second highest period of prices used to be in the middle of the day. That's when the solar's operating. So if you look at its impact on revenue, it's been bigger than its impact on volume. Similarly, wind speeds tend to be higher at night. So they tend to operate in the overnight period, which is why they are a complementary technology to solar, and they tend to detract from the thermal baseload basic chore of running industry overnight, if I can put it that way. There's other aspects of the problem I haven't bothered to talk about or haven't had time, but the key difference obviously between solar and wind, really is solar's ability to be, and its advantage that it probably has to exploit, in my opinion, at every opportunity, is its ability to be distributed. This is a key thing that virtually no other technology has. Wind from the system's point of view, leave aside its intermittency and variable cost differences, is really no different to any other source of generation. It's produced at utility scale, it's connected to a grid, suffers transmission and distribution losses, has hidden costs resulting in the network costs that have to be absorbed, blah, blah, blah. Solar can be produced right where it's consumed. So, in most countries, one way or another, transmission and distribution makes up between 30 and 50% of the total cost of electricity. And so, in a straight financial perspective, there's a wonderful arbitrage opportunity for solar, and that's what grid parity is, of cutting the wires and poles out of the system. That doesn't mean not having any wires and poles. It just means that solar is financially advantaged when it can be produced close to the point of production. From its unit costs, it's really no different for a grid scale solar PV system, or not much different, to one that's just powering a path light in your backyard. Sorry.
You talked about solar having to compete with the marginal cost of coal. In the future, you said that €25 a megawatt hour. That's because we've written down we've paid off the capital investment in coal, most of our plant. But that also reflects the fact that the average coal-fired generation is 30 years old or 40 years old now. What effect do you see in the next 10 or 20 years about retiring old plant, when the cost of operation and maintenance starts to...
Yeah, no, that's exactly right. As the old plant is forced out of the market, it clearly creates opportunities. The trouble is that the decline in electricity demand has meant that, in fact, there haven't been as big an opportunity from that as we would have hoped. So in Australia, people keep hoping that companies will make more money because coal and gas prices are going up, and the odd coal-fired electricity generator is moving out of the market. But so far it hasn't happened, because the reduction in demand, which is probably will come to an end, has sort of offset that. So, but even if we look this calendar year, because of the closure of an aluminium smelter, Victorian electricity consumption for the first 4 months cumulatively of this year is down 8% on last year. They're big numbers.
There's a question over here.
Oh, excellent. Thanks, David. So you've sort of left this hanging question at the end about storage, that for you that's one of the three potential key drivers for increased PV generation growth. Where do you think it needs to get to from where it is now? Because there's been a lot of hype, especially in the past week or two, about distributed storage.
Well, it needs to come down. I mean, it doesn't take that long to work out the economics of it. You know, you get a battery, it's got 10 kilowatt hours. You assume you can get 4,000 daily cycles out of it. You can quickly do an NPV sum to work out what electricity price you need, assuming you've added in all the other components and bits and pieces of it. But this is where all the I'm going to call it market bullshit, or the fog exists, you know, of trying to work out exactly what components you do need and whether, you know, like the inverter you need to convert it to DC back to AC, and, you know, the housing for the whole thing, the labour skills that are required to install it, and the integration, the little tiny computer chip that should cost about a cent that sits on top of it that works out what to do at what particular time. There's a lot of discussion about all that. And then I think we're at the very beginning of the battery side of things, but I certainly think that and I'm sure we're going to learn a huge amount about it. And every day you read about some new exciting battery technology, which is, you know, every time you read one of those, you should close your eyes because they're nearly always a recipe to lose a lot of money. But you know, from where I sit, the car batteries are different to the household storage batteries in the straight lithium side of things. I think from what I read, the lithium car, the Tesla batteries have nickel and cobalt in them, lithium, nickel, cobalt. So, you know, whilst lithium is, from what I understand, is a very abundant product in the world's earth, nickel and cobalt certainly aren't. And if you have enough demand for those kind of batteries, you'll clearly run into higher costs over time. Whereas I think the household sort of batteries that they're talking about are lithium iron phosphate, which don't, from the very little I've read, you seem to be able to have a very large amount of that before you run into any raw material constraints. I don't know if that answers the question.
Well, I guess long term, are you pretty bullish on distributed storage, or?
Long term, I'm very optimistic that most people are very ingenious, can solve most of the problems given enough incentive that they're given. But the long term, who knows? I won't be here in the long term.
Thank you for the talk. So if the market dictates what's going on in terms of what we accept or not, because it's driving it from the price basically, why do we have to take the market as the market dictates, and rather not, can we do something to change the way the market behaves? So people are willing to pay for a car that makes absolutely no sense from an investment point of view. People are willing to pay for broadband where they don't really need it, and they pay 3 times more than they used to pay for just a phone that they actually needed. So couldn't we do something, or think of how do we actually change the market so the market does what we need to do, what we would like it to do?
Yes.
And so isn't that one of the big solutions then, thinking of actually changing the market and not letting the market dictate?
Yes, you're thinking like an entrepreneur. I like it.
So why is it that it's not considered into the solution? Why is it that so for example, if we were to invest in a certain amount of education to the consumer so that the consumer thinks that it's actually cool to have renewables and to have to be energy efficient, why isn't that considered as a solution and actually quantified? I bet that you can quantify how much it would cost to educate.
I'm sure you could quantify lots of things, but my experience is that you can get 99 out of 100 things right in markets and miss the 100th thing and still go broke in a hurry. I would say that there is a tremendous amount of education. About half the population, maybe more than half, is all too willing. I mean, solar PV is one of its big advantages, that people do like it. People do like it. Everyone likes the idea of doing something, feeling green and environmental. It sort of gives you a warm and cuddly feeling, you know. I mean, it's something most people can agree on. We'd all like to live in a better world, you know. And so you can sell people. People will buy some of these household batteries just for all sorts of reasons, for the same reasons that people bought plasma TVs when they were first introduced, because the guy next door doesn't have one, you know. So yes, you can market that, but you're not going to get governments to jump up and down and support you on that basis. You can, and this is another thing, I'm glad you've raised it, is that one of the consequences of the electricity technology changes that are going on are so similar, and this term disruptive technology, one of its tendencies is it tends to be very consumer driven, and it tends to be very empowering for the consumer over traditional monolithic utilities. And so if you can find ways to exploit that in the industry, that's terrific. That's terrific. But don't expect the utilities to just take it and not try to do things. So, where's the battleground at the moment on that? It's on grid parity in Australia, and it's around whether the networks how they should charge, and the fixed charges, capacity charges, maximum use charge, maximum demand charges, distance from the generator charges, there's a whole 50 different pricing schemes you can imagine. But the networks are very slow, and most of the changes have disadvantages as well as advantages, and will incentivise different forms of behaviour. It comes back to the point earlier made about prices. Price signals do induce consumer responses. But basically, yes, marketing is wonderful. I think there's a school out here at the university you can attend for marketing, which probably give you a few more ideas on that sort of space.
We don't have time because we have lecture after us, and there was upset a lot last week. So please thank David for a great talk.